Good afternoon, Jonathan Camarda, Chief Investment Officer. And as we do a pretty expeditious retake and wrap of what's going on, we'll start with the global macro headwinds as we have inflation pretty much rampaging globally in confluence with countries tightening quantitatively. So it is an interesting elixir of certain pain that you're seeing out there, playing throughout the markets. It'll be interesting to see as the Fed came out, I think Powell yesterday foreshadowing the 50 basis point rise, which everyone really knew that was baked into the cake, and yet the algorithms market drove down after he spoke yesterday into today as it's continued to sink. No one really believes Bullard, the hawk, saying 75 basis points, as again Powell kind of foreshadowed that 50 basis point hike. We'd be impressed, if the Fed ends up at 2 to 2.25 on the Fed funds rate by year's end. We'll see if they ratchet it up that high. Now, as far as the markets go, the strongest areas continue to be consumer staples, still down today, and the S&P 500 value companies still down today in sympathy with everything else, but are holding up the best and have been a nice place to hide this year on a relative basis. We'll see if that pattern resumes as we move into next week. As earnings have rolled through, it's been a mixed picture, as you know. Certainly technology is certainly in the light there. Netflix, of course, had a woeful earnings session there with subscriber losses and as such. And again, you've seen a lot of the streaming services fall in sympathy with them. Is that just a moniker of people trying to save money? Probably, as they start to look at those credit card bills and look to where they can trim. Now, on a top level, technical level, as we look at the markets, the S&P, the Dow Jones, and the NASDAQ all now below their 50-day moving averages, with the 50s firmly below the 200s. So in the short term, that does show a downtrend. Again, the things that have been holding up, certainly turning today, and we have to watch our winners in like energy, materials, and the such, as well as other type of commodity type structures that have done well. This time of year seasonally get a little weaker, so you might see some trimming of those or elimination altogether in your strategies to be determined. And utilities as well, which has done well for many of our clients, even in a rising rate environment, certainly have to watch to see again if that starts to top. But again, a lot of those companies have solid dividends and good income streams. So again, they've been a real good bond surrogate this year. You may have noticed in some of your conservative strategies. With that being said, May tends to be a weak part of the year. The old sell in May and go away, which hasn't worked the last few years, but if there's any year it might work, it could be this year. Work being the operative word, being facetious there. So again, we will probably take action as we move, as we see continued precipitation of downside slides, as we move into the late month of April into early May. And again, if you guys have any questions as you're talking to your PWAs on a relative basis, clients have held up very well due to that sector rotation that we've implemented. However, again, we have to keep our head on a swivel and we have to play, again, on the balls of our feet to be very quick and nimble in this environment as the landscape changes ever that much more rapidly. Even then in 2008, because remember, the computers, the programmers, the Python and C+ programming traders did not rule the landscape like the dinosaurs did billions of years ago the way they do now. With that being said, try to have a great weekend. Try not to worry. Leave that toxicity to us. It's a pleasure, again, to serve you, as we do appreciate your time, patience, and most importantly, your trust. Jonathan Camarda, Godspeed.